Hi there. So we're into the fourth week of February, and the markets this week, as expected, were range bound, mostly stable, and it ended up 0.78% above its previous close. So it did sustain 22,000 and above for most part of it, and closed 22,212 to end. So that's a pretty good run up, I would say, and fairly stable. And in terms of even the advances versus the decline, we saw a good 30 advances over the week and 20 declines. The FIs continue to sell, but as what we've been seeing in the market from quite some time, the domestic institutions continue to buy, and that is what brings the required stability in the market. So a good week for the market for that matter. And as we've been doing, we'll follow and take one of the quotes. What it says is that the older I get, the more I see a straight path where I want to go. If you're going to hunt elephants, don't get off the trail for a rabbit. Now that's a pretty deep one, because what happens when we often participate in the market, we are, obviously listening to a lot of noise and trying to react to it. Very typical psyche of anyone is to just try and pick very small trades, but which seem like very safe and at the same time very profitable. But the idea over here is more to actually try and give a sense that it's not really, what matters is not how many times you actually hunted for the rabbit, but how many times you hunted for the elephant. So the idea over here is that make sure that when you're taking decisions from long-term perspective. You are able to actually take the right position size and take the right time horizon so that you can make good profits. That's the intent. And the more you stay in the market, the more you move away from give me a stock pick, but give me a bet from a long term perspective wherein I can build the positions. So that's the basic intent of this, and very, very thoughtful. And at any point in time, you're thinking of investments, you're thinking of even building positions from a trading perspective, try to take a bet which allows you to have a right ticket size and also allows you to slice it appropriately. In terms of the sectors, what we saw during the week, realty really up by 4.08%, primarily because of DLF, and it ended up buying a land parcel in Gurgaon, which unlocked a lot of significant value, because obviously that is a place in which it operates and it allows them to develop that piece further. FMCG up by 1.53%, rest of the sectors fairly range bound. IT down by 1.12%, not a very significant downtrend. So as you've been seeing that we've been trying to build on the infrastructure uh, theme ever since the budget came, and we're going to build it further uh, to understand what are the picks. Last time we had talked about power as a sector. Today we're just taking a basket of infrastructure companies and seeing where we will bet and what do the numbers look like. So we continue to develop that further. Now, in terms of the infrastructure fund sector, it has been growing at 5.6%, 5 to 6% over the before the pandemic. But ever since post pandemic and the focus from the government, it is expected to grow at more than 12% CAGR, and that's why so much euphoria in the market for the infrastructure company is in the last 1 or 2 years, and including after the budget. So with that, now what is expected in the coming years, the CAGR for uh, the infrastructure is around 9.57 from 2024 onwards. And the focus, the capex allocation has been greater than 11.1% for infrastructure projects by government, which is the primary reason that we are saying that it is going to grow in 2024 and beyond that at a much higher rate. And with that intent, what we did was we followed the same trend. We took three companies, L&T, IRB, and JSW Infra. Now, L&T, as you know, is in turnkey projects. The stock has seen significant uptrend in the last few years, and price to earning is pegged at 36.8, whereas it has traded in between 25 and 28 earlier. Its 5-year profit growth is 3%. If we look at TTM profit growth, it is trailing 12 months profit growth at 26%. PEG ratio at 12.2 and net profit margin at 6.52. So definitely L&T is a very stable stock, and it is one of the front runners in the infrastructure companies. But if you are not already invested in this particular stock, then at least the recommendation won't be to go into it. Another company that we studied during this week was IRB, which is again not a very large corporation, but price to earnings at 73.5, debt to equity ratio at a reasonable level of 1.33. But the profits are not looking so good, so that's definitely not on our list. Profits are growing at the net profit margin is growing because it's at 9.52, but still the overall profit growth has been negative. The third company that's looking the most promising for us is the JSW Infra. What we're seeing over here is debt to equity ratio is at 0.63. The trailing 12 months profit growth is stupendous, is at 127%. And that's why we are thinking of building positions over here. We haven't built it, but we would be actually taking positions over here. This is the really the silver lining for us in this particular space. The PEG ratio is still at 3.22, but still worth going after. Net profit margins decent at 27%. So for us, it is this company currently that we are looking at. We'll be studying this further, and if it seems exciting, then we will build positions over here. Typically the way we do it is that I at least take 2% of my portfolio and invest in it, but ideally it should be around 4 to 5%. But this is one company in which I would be investing 2% of my portfolio over the next few weeks. I've already invested some part of it. Now the key takeaways, as I mentioned, driven by increased government capex and the expectations of this. The infrastructure is definitely a high growth sector for medium to long term investors. We are also going to look at some of the mutual funds that can help in this space. We're going to go deeper into this section. And as I mentioned earlier, JSW Infrastructure is the one that we are looking at. It is primarily into port management, and it has received a letter of intent from Jawaharlal Nehru Port to manage its operations and additional cargo berth. The stock profit is grown by 127% in the past 12 months and is expected to continue its momentum. So it has broken its all-time high recently, and we can expect the momentum to continue in that direction. So that was a very quick focus on infrastructure and a wrap up for the week. As I mentioned, JSW Infrastructure is the one that we are picking up for now, and I'll see you in the next one. Have a good week in trading and at work, and stay invested. And whenever you decide to make investment, as the quote indicates, you should have the conviction to build positions and not really look at very, very small trading positions or investment positions. So position sizing is extremely important. That's the key takeaway for this week. I'll see you in the next week. We'll cover further on one of the sectors, and we'll talk about how the market shaped up. Bye and have a good week.